Welcome to XM.com. You're watching the special report on gold. I'm Christina Marujos. Joining me today is senior investment analyst Marios Hadjikyriacos. We saw a rather peculiar trend in gold this year, Marios. Despite higher inflation and other risks, it was unable to shine and was actually struggling to gain momentum. All that seems to have changed with the latest CPI numbers out of the United States when we saw gold jump to reach 5-month highs. Is gold becoming an inflation hedge again?
Hello, Christina. Yes, but indirectly. So let me explain what I mean by that. You are absolutely correct that gold didn't really behave like an inflation hedge this entire year. Every time inflation accelerated, gold prices got smashed. And the logic was that central banks would be forced to fight rising inflation by hiking interest rates, which is, of course, higher rates are negative for gold. Now that pattern broke last week. We saw US inflation accelerate, but gold still moved higher. Now, one way of reading this is that bullion is becoming an inflation hedge again. But the more precise explanation is that gold is benefiting from weakness in real treasury yields. Now, what are real treasury yields? The US Treasury issues some bonds that are linked to inflation. They essentially protect the investor if inflation accelerates. Now, because everyone is looking for protection against inflation, what we saw last week was inflation accelerating and everyone started buying these bonds, which pushed the yields on those bonds lower. In fact, we saw these real yields hit new record lows in the aftermath, and that boosted gold. The lower real yields fall, the more attractive gold becomes because gold doesn't pay any interest to hold. So yes, gold is becoming an inflation hedge, but it's not really because fund managers are suddenly lining up to buy the metal. Rather, it's because they are lining up to buy these inflation protected bonds that is pushing real yields lower, and indirectly that is boosting gold.
Now, one would argue the gold rally is likely to persist for a while, considering that supply chain disruptions and inflation don't seem to be that transitory after all. What else could be beneficial for gold prices?
The biggest argument is what you just mentioned. The inflation story could get even spookier in the coming months. Of course, if we see inflation accelerate any further, that could keep demand elevated for inflation hedges, and that could keep real rates near record lows, benefiting gold. Now, the other elements, and the more minor arguments, we should say, are geopolitics and seasonal patterns. So, geopolitically, we've seen tensions rising very substantially lately. China has been conducting military exercises around Taiwan. Russia has been amassing troops next to the Ukraine, and America has even warned that an invasion might be imminent. Now, in reality, neither of this is likely to escalate into an actual war, but the risk alone could be enough to boost safe haven demand for gold. Now, the other argument is seasonals. Seasonal patterns should not really exist in efficient markets, but apparently they work in gold. We have seen gold perform very well in the last 8 out of the last 10 Januaries, and in recent years we have seen traders front run this pattern. So what we've seen in the last couple of years or more is that traders start buying the metal since December. Now, there are several potential explanations for that. For example, holiday demand for jewelry and so on. The cause is unclear, but what is clear is that the holiday season is pretty strong for gold seasonally.
Now, having said all this, what is the broader outlook for gold?
Well, here's where it gets tricky. I think we're likely to see this rally endure for a few more months, but at some point towards the middle of next year, I think it's going to reverse. So essentially what I'm saying is this might be a bear market rally. Now, why is that? The entire rally hinges on inflation staying very hot, but there's a strong chance that inflationary pressures will cool towards the middle of next year or towards the end of next year. At some point, the chaos in supply chains will subside. More energy production is also going to come back online to cool oil prices, for example. And if inflation doesn't come down by itself, central banks will raise interest rates enough to bring it down. So in other words, I think this is the Goldilocks environment for gold. We could see the rally persist for a while longer, but heading into the middle of next year, all bets are off. Real yields cannot stay this depressed forever with central banks raising interest rates. Enjoy the party while it lasts, but I would be careful of sticking around too long.
Marios, thank you so much for joining me today. And thank you for watching this special report on gold here at xm.com.